Hi, I'm Pedro da Casa, and this is Peterson Perspectives. China's market economy status is suddenly in the news with the 15th anniversary of the country's accession into the World Trade Organization. Now, Chad Bown, a senior fellow here at the Institute, is writing a paper about just that. And I watched President-elect Donald Trump speak on television, and he addressed this issue.
The nation of China is responsible for almost half of America's trade deficit. China is not a market economy. They get a lot of help. And that's why we designate them as being a non-market economy. Big thing. They haven't played by the rules. And I know it's time that they're going to start. They're going to start. They've got to.
So first, Chad, let's talk about the significance of this 15th anniversary and why you decided to write this policy brief exactly at this moment.
So December marks the 15th year that China has been a member of the WTO. When China was allowed in, it was granted non-discriminatory tariff treatment into what are now more than 160 different countries' markets for its exporters. In exchange for that, it had to open up its own import market to trade and investment. But what it also did is it granted the other 160 now countries access to this special thing called non-market economy status for their anti-dumping investigations.
So, we heard the president-elect essentially criticize China with the same tone that we've heard throughout the campaign. And he was arguing that there's no way that he's going to grant market economy status, and he was essentially blaming China for being anti-competitive. Now, I know that dumping disputes are part and parcel of trade relations between the United States and China. Can you explain a little bit what anti-dumping is and how U.S. policy works on that front?
So anti-dumping is a law that the United States has access to. And what it does is it allows a place for U.S. manufacturing companies, agriculture, to come forward and say, listen, a trading partner, maybe China, maybe somebody else, is selling their product into our market, and it's hurting us, and it's because the prices are just far too low. They're unfair. So in the case of China, we've been using this policy for a number of years. What's special about this non-market economy distinction is it allows for the U.S. government to adopt a special kind of process. Okay. The idea is we don't really understand what prices and quantities look like in China because they're not a market economy. The government is heavily involved. And so instead of looking at information in China, we'll look at information from other countries to try to figure out what their costs might look like. So we've been doing that, and if you look at this chart, over the years we now have about 7% of U.S. imports from China that are subject to these kinds of import restrictions. And the idea for China is, well, after 15 years, if you take off this non-market economy distinction, they might like to see these sorts of import restrictions tend to go away.
So Donald Trump says he's not going to give them that status. How's China going to react, and is that really a fair thing to do, given that that was the expectation in the agreement in 2001? So
we're not clear as to how China is react. There's a couple of different paths that they could take. It's likely that their initial response will be to say, there is this thing called the World Trade Organization out there, and there's a court essentially that operates to adjudicate disputes between the United States, China, countries that feel like they haven't been treated fairly in the process. So it's likely that China will file a dispute against the United States, and there'll be a ruling. It'll take a couple of years, but there'll be a ruling to judge how to interpret their entry into the organization. The concern is that, though, that might not be the only thing that they do, that they might start seeking to retaliate outside of the rules and outside of the WTO system, and potentially retaliate by themselves imposing higher tariffs on U.S. exports. They've done this in the past. I've got a chart up here that'll show you, over the period starting around 2009, they substantially escalated their use of anti-dumping against U.S. exports, reaching about 8% or so in 2011. And the concern for today is if we don't address this somehow, that things could also, sort of spiral out of hand in terms of U.S. exporters being hurt by these kinds of policies.
And would there be a great cost to actually granting them market economy status if if that were the case?
I think the answer to that is no and yes. So first, no. I think the legitimate concern is if you were to take away this non-market economy distinction from the United States in terms of how it could treat China in these anti-dumping, this very technical trade policy, these anti-dumping investigations, what would happen? My estimation is actually not much might happen. And the reason there is over the last 8 or 9 years, the United States government has developed a separate trade policy tool to deal with unfairly low-priced or subsidized imports coming in from China. And so all of a sudden, if you took this one tool away, the anti-dumping, away from the United States government, it has something else to use in its stead.
Tell us a little bit about what that is. And,
so that policy, it's a little bit more complicated than anti-dumping, but not much. It really looks at whether the products that are coming in from a trading partner are subsidized or not. And this has been what the main concern is with China under its evolution under the WTO. It's certainly made tremendous progress and strides to becoming more market-oriented than when it started out in 2001. But the United States would argue it still has a long way to go. And where and in what products that there are government interventions, subsidies, if not direct funding from the government, but indirect subsidies of some sort, the United States, having access to this other trade policy, countervailing duties, could seek to stem that. And if we go back to that first chart that I was showing, that shows how over the last 7 or 8 years, the United States has started to actually ramp up the use of that other policy. And it could probably replace a lot of what it has done historically with anti-dumping through this new one.
So finally, given the tone of anti-trade sentiment that's been rising around the world, what do you expect from U.S. and China trade relations and really trade across the world and what's impact on economic activity?
So I am a little bit worried about the heightened rhetoric and the potential for a trade war to break out. What I would hope to happen is that China and the United States might use this opportunity, the 15-year anniversary of China being in the WTO, to kind of reboot, reset, to reestablish some new dialogue to confront really these issues that now need to be dealt with. The fact that, yeah, we do still see lots of imports coming in from China into the United States, and we're at a moment in time where that's really politically sensitive. And we're also worried that China really hasn't made the full, complete transformation to a market-oriented economy that I think we would be more comfortable if it made in the United States. But also there's arguments and reformers within China that would also like to see that kind of activity taking place there as well. So I think if the two sides were to see this as an opportunity to take advantage of reestablishing dialogue, that might be more fruitful.
Interesting. Thank you so much, Chad. I appreciate your time.
Thank you.